Yo, what's good people? Hopefully you're all having a great trading day. I want to do a breakdown on how I do my top-down analysis and how I go ahead and do markups on my chart. It's a very powerful strategy, and if used correctly it can make you a lot of money. But with that being said, be sure to always backtest and practice anything you do see online. It is very important, though this way is a very easy and simple way to make money within the forex market. So without further ado, let's get straight into it. Now I am going to clear my chart and just take you through a step by step. So I like to start on the monthly, and most people who do swing trading or who do structural trading as well as just trading with the trend, they would typically start on the monthly, and the reason being is it just gives a nice little kind of directional bias of what is going on. Now I can see within most recent price action, depending on the sample, the most recent price action from here has been bearish. We can see that because if you look at the highs are getting lower and the lows are also getting lower up until recent, which we'll go ahead and we'll get into in a second. So I like to draw my levels after I've identified the bias, and the way I do that is I would typically look at levels where we've had reactions or there's been a kind of abundance of candlesticks just plotted around, and this is my supply and demand areas. Now supply and demand is a little bit different from support and resistance. The reason being, supply and demand is areas where institutions typically trade off. This is not exact science, but where they have more money they need to be trading on, or they typically analyze on higher time frames as well, but that's obviously due to the kind of the sums of money they are trading with, so it makes sense. Now demand is really support, and you can kind of figure out which orders would kind of be accumulating around that level. The answer is buy orders, so there's going to be buy orders around the demand, and then there will be an abundance of sell orders at the supplier. So that's how you really got to think of it. There's going to be people buying here and people going to be selling here, and that's just typically, well, not exactly science again, but it's just typically the way of the banks and how they typically like to work. But I'm not trading with the banks or anything like that. However, I'm just following the trend of the market, and I just like to be on the correct side of the order flow, because really you just want to be catching the bigger moves when you always, well when you can anyway. So after that I'm going to just quickly do a fib, because I like doing fibs just to get an idea of retracements as well as if this level was held. And again, it's also nice to see the fib kind of aligns into my monthly level, which again is just really good to see. It gives me more confidence in the analysis. So weekly, I would I would mark up my levels. I mark up my levels a little bit different. I use boxes for weeklies, and that's just because there's more candlesticks, so it's a little bit more visually pleasing and easier just to do this way, because like as you can see here, we got a test in here, there's some consolidation here, so that way it's a little bit easier to go ahead and do, and it just looks nicer. It's a bit of variation between just having black lines. So let's see if you draw anything else. Like, we got a bit of the bull flag here, and this bull flag seems to be playing out, which again it's another reason why I feel like New Zealand chef is definitely going to be more bullish than bearish. Actually, you know what, I don't think I said it as well, but it looks to be a bit of a break and a retest. I just see that then. Yeah, break and retest, which again, that's another confluence to go ahead and be wanting to take the trade. So now I've maxed out my weekly, I can drop down to my daily. Now again, my daily, I'm really just looking at most current price action, because this is where I'm really trying to be fixated now. I've got my weekly and monthly levels mapped out, so I will then just go ahead and draw some daily levels. So I feel that this is a good little daily level. Just change the variation. I'm gonna do dotted lines. Dotted lines here. I'll say dotted lines here. Probably here. So that's the levels that I'm kind of marking out as my dailies. We also can see the bull flag has been very respected. Well, it seems to be respecting this level. Is there a fib? There's probably another fib in here. 61.8 fib again, which is it's just coincidence really that you just get two fibs back to back that just respect off the 61.8. But bull flags, like if you look at most majority bull flags, they will retrace around about 61.8% before continuing up. But again, that's no exact science, but if you was to back test it, you'll be able to see for yourself. Now again, we have a little hammer here. We have a long-legged doji and a bullish engulfing candle, very strong candlesticks, which just gives me more confidence that this is definitely gonna be a bullish trade. And again, this is the power. Sorry, this is the power of aligning confluences and aligning time frames, and then overlapping confluences throughout all these different time frames, because it kind of just lets you build a picture, lets you build a story, and then that way you can feel more confident to go ahead and take a trade. And the reason people fail in trading, it's nothing to do with the technical sides of the trading. It typically comes down to the psychological kind of and the mindset. So by doing it this way, it's like very systematic. It's very much of a kind of a checklist approach. I'm going ahead and going through each time frame. I'm checking off. I'm overlapping. I'm then matching between the two, and it's very helpful. It's a systematic way to go ahead and trade the markets, and I think that's how trading should be. It should be a lot more. I'm going to mark this off as my 4-hour level now. Trading doesn't have to be difficult. It needs to be repeatable. It needs to be consistent and do the same thing like day in, day out. And by doing it that way, it just you can't really go wrong. And right, I'm risking 1%. If the trade doesn't go my way, it doesn't go my way. I'll just look for another one. But yeah, that's just a little bit of an insight of how you kind of can deal with psychology. On the 4-hour again, look, we can see we're definitely more bullish. We broke past this little bit of a descending trend line or counter trend line, and moving averages look like they're going to cross over. Let's see if we get a nice little fib. I can just fib it from here. I can fib from here if we get the pullback, but we're most likely going to test into the monthly. Or test into this level. We'll see what happens, but for the time being, I'll just do it from here. And again, it's very good to be able to draw monthly levels and then weekly levels and then daily levels, because really by having all these areas marked up, I'm just waiting for price to come into these areas, or I'm waiting for price to get a reaction from these kind of levels. And it just helps me, because charts can just randomly react and you'd be like, oh, it just randomly reacted. But if you was to zoom out, it could have reacted off a monthly level, or it could have reacted off of a supply demand level, or something along those lines, whatever you would like to call it. And again, it's not an exact science, but it works. and it's like don't reinvent the wheel. Just follow the trend. Trend is your friend, and you will get rewarded if you go ahead and trade this particular way. I'm gonna just find the nice. So the golden ratio also kind of elapse or kind of goes into this area, so that could be a take profit. So let's just finally wrap it up. I'm gonna just do a 30 pip stop loss and 5.8 risk to reward. So again, that's a lovely little risk to reward. Pretty reasonable pip size, 175 pips. It's not unlikely. The stop loss is a reasonable size. Yeah, and again, this just seems to be like a very nice trade, very simple, nice confluences. Hopefully you enjoy it. So make sure to like, subscribe. I will catch you in the next one.